I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the September 2023 meeting. At its latest meeting, the FOMC chose to leave the target Fed funds range unchanged at a level of 5.25 to 5.5%, and they also maintained the rate on reserve balances at a level of 5.4%. The decision was a unanimous one and was widely expected by those who follow the Fed. The post-meeting statement changed very little. Economic activity was described as expanding at a solid rather than moderate pace, and job gains were said to have slowed but remained strong rather than being described as robust. The bigger news is that we received an updated set of economic projections from the Fed. The markets wanted to have a look at the updated dot plot to see if the Fed still expected one more rate hike this year. Sure enough, the median expectation for the Fed funds rate is 5.6% at the end of 2023, the same as in a June projection. And the expectation for the end of 2024 was 5.1% versus a June projection of 4.6%. A few notes here. There are definitely two camps at the Fed regarding whether or not to hike one more time in 2023. 7 dots in the plot showed rates remaining the same, and 12 dots showed one more 25 basis point increase. The latter won out in the median estimate game, but it doesn't seem settled yet. For 2024, the dots are fairly dispersed, but overall, fewer now expect the number of cuts in 2024 that they did in June. We'll see what insight Chair Powell gave in his press conference after the break. Welcome back. In the opening remarks at his press conference, Chair Powell gave his assessment of the economy. He said the economy is expanding at a solid pace, with recent readings on consumer spending being particularly robust. He also indicated that housing has picked up a bit, though it, as well as business fixed investment, continue to be weighed upon by higher rates. Further, the labor market remains tight, though supply and demand continue to come into better balance. Finally, inflation remains too high, with the estimate of PCE prices up 3.4% over the 12 months ending in August, and the estimate of core PCE up 3.9% over the same time period. He noted the committee raised the policy rate 5.25 percentage points since early last year, and they believe the current rate is restrictive. They can now proceed carefully to determine the top of the rate cycle. He said the committee is prepared to raise rates further if appropriate, and the committee intends to hold policy at a restrictive level until they are confident that inflation is moving sustainably down to their 2% objective. In the question and answer session following his prepared remarks, Chair Powell drove home more of the same message. He said the committee chose to maintain the current level of rates at this meeting in order to see more data so they can determine if rates are restrictive enough. He said the only way to know if rates are restrictive enough is to watch the data. He said the committee does not want to jump to conclusions, and they want more data to be confident that rates are at a level that will cause inflation to come down to 2% over time. He indicated multiple times that the committee can afford to be patient as they determine that level. He also said a soft landing is the goal, and he believes that's possible, but he cannot consider that the base case. Well, Chair Powell and the Fed continue to deliver their message of data dependency, patience as they determine the top of the rate cycle, and rates higher for longer at the top. A bit of a hawkish tone is expected, but no surprise given Chair Powell continues to stress that doing too little in the inflation fight is a much bigger risk than doing too much. That's the FOMC update for September. Thanks for watching, and be well.